Hey guys, welcome back to another video. Today we'll be doing an analysis on GameStop. Starting out in the overview, let's take a look at their PE ratio. So they currently do not have a PE, which means they've been losing money. This is never a good first impression. So secondly, let's look at their dividends, which they currently also don't have anything. So this is fine, as they probably would rather just reinvest their extra money back into the company. Taking a look at their income statement now, let's look at their revenue. So as of the most recent year, they're bringing in 5.09 billion, which is down about 3.5 billion from 2017. Obviously, this is not good, as you want to see the revenue increase consistently every year. Now looking at the net income, it's even worse, as they're not even profiting anymore. They've had 3 negative years in a row now, which is nothing but a red flag to me. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. So as you can see, it's been going down drastically, which is actually great to see. They started at 103.4 million and managed to lower it down to 65 million. Getting into the balance sheet now, let's take a look at their current assets. So in 2021, they have 1.55 billion from the 2.14 billion in 2017. This is a decrease of 28%. Going into the future, we can assume that this will keep going down for now. Next, with their current liabilities, they're at 1.34 billion, which is a decrease of 24%. If they're downsizing their current assets so much, I can see why the current liabilities also went down. The last and one of the most important aspects to look at in any company is the free cash flow. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. As you can see, it looks mostly bad, just like everything else with this company. They're consistently having less and less cash flow every year, and even went negative in 2020. In conclusion, GameStop has awful financials. I usually try to give some constructive criticism of what I want to see be improved on with the company going forward, but in this case, literally everything but the shares outstanding needs to be worked on. This company has no value at all, as it's losing more and more business every year. It's not worth more than $10 per share, if that. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I'm just a guy on YouTube speaking my opinion on stuff. So I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.